First of all, good morning, everyone. Hope you're having a fantastic week so far. Thank you so much for joining us. My name is Ben Howell, and today I'm joined alongside my colleague, Prerna Mehta. We are both New South Wales and ACT BDMs, and we're here to run through today's webinar on helping businesses get back to business and through providing you with some interesting insights that we've seen at an organisational level, as well as from a broader perspective across the SME market during the COVID-19 period. And look, and most importantly, we want to run through our brand new products in market that we've developed as part of the SME Government Guarantee Scheme, which we're obviously very excited about and very much look forward to getting these out into market via our broker channel so we can help lots and lots of small businesses get back to business. We all have a part to play here, guys, and as brokers, you're essentially the conduit to helping businesses access funds, help them grow, get them through this, and get back to normal. Then lenders like us are here to support you in your efforts to get your clients back to business. We're all in this together. Now, if anyone has any questions, please do not hesitate to ask them through via the chat box. Prerna and I will do our best to address these at the end of the webinar within the time frame that we have. And of course, for those that we don't get time to answer, or for those of you that actually have any questions or customer scenarios that you'd like to discuss after the webinar, obviously more than welcome to contact either Prerna or myself post the webinar. So let's get into this. So the three areas I want to sort of cover today, obviously the impact of COVID-19. Sorry, technical issues here, sorry guys. Here we go. So number one, the impact of COVID-19 on small businesses, obviously covering the back to business products under the Government Guarantee Scheme. And the third part is why partner with Prospa and why we should be your lender of choice in this segment. All right. Okay, so guys, now a lot of you out there have probably seen this information. Sorry, Freddie, might want to get to the next slide.
Apologies, it's very slow. It's not wanting to work for us today.
Technical difficulties, fintech. Sorry, guys. It's not working.
No.
Right at the start, about to crack on. Here we go. I think it's starting to work now. It's a bit slow. Alrighty. So yeah. So this next part, we want to sort of cover off. You may have seen this before, but I think it's really important to sort of cover off the SME market in Australia. So we know there's roughly 2.4 million businesses in Australia, and 97% of those are small businesses. They basically employ about 44% of the Australian workforce and equate to about 35% of the national GDP. So from a broker perspective, if you're not in this space, it's really important to start thinking about trying to tap into this market. And you know what? The question that we've been getting a lot lately is, what is the future of the SME market in Australia? Now, look, this is quite a tricky question to answer, and unfortunately, we don't have a crystal ball to see how things will play out. But you know what? What we can do is have a look at historical trends. From what we understand, look, some businesses will survive, some won't, but what we know is growth is inevitable. If you think about the GFC crisis, in the peak of the GFC, SMEs took a pretty big hit. In fact, 26% of businesses in Australia actually closed down, which is circa 630,000 businesses. And it's around 190,000 New South Wales and ACT alone. However, what history tells us, it tells us that there's always opportunities in any market. And following on from the GFC, you can see in this graph that we've got here, the number of businesses started growing again. And it was essentially an upward trend until this pandemic hit. And I just want to reiterate, guys, look, during times of crisis, there are always opportunities. In fact, in the US, 60% of Fortune 500 companies were actually started during either a depression or recession, including businesses like Microsoft, HP, Hyatt Hotels, and one that our colleague Erin Mehta loves, Hungry Jacks. So, and she'll probably kill me for saying that. But anyway, so look, over the next 12 months, it'll be pretty interesting to see how it plays out. As I mentioned before, look, we all have a part to play here, broker and lenders alike, and it's extremely important for the Australian economy, for all of us to get involved. So look, I'm going to say this a few times throughout the webinar. Look, if you're a mortgage broker or you're not actually tapping into this space and you have self-employed customers, start thinking about, where you can actually help them. And at Prospa, we've got some pretty good products which we'll go on and talk about later. Next slide, please. Here we go. Okay, so now this is a bit of an interesting slide, piece of information. So I won't talk to it at each percentage or point specifically, but I want to cover off three key areas. Now, on the left there, obviously, it sort of talks to the number of small businesses broken down into each state. On the other side, it's a visual that it's basically a survey that the ABS did in May about the business impacts of COVID-19. So three pillars I want to talk to. So the number one piece I want to talk to is demand, the decrease in demand. So due to these restrictions, we all know here, consumer business sentiment was massively down. In fact, 82% of we saw an 82% reduction in local demand. There was an 18% reduction in international demand. So those businesses that export their products and services overseas obviously were impacted there. And that talks to the global impact of COVID-19. We had 73% of businesses receiving less income, only 22% actually remained the same, and only 7% of businesses actually had an increase in their revenue. So some pretty drastic numbers there. But again, keep thinking about the opportunity and how you can actually help your customers. The next bill we'll talk about, now this is a pretty important one here, is supply chain. We had the biggest supply chain disruption since World War II. And if you think about that, that can pretty much stop a nation. So things like supply chain, for things we depend on, like food, medicine, cleaning supplies, and of course, if you had the challenge that most of us had, get old toilet paper. But look, the thing is here, look, even big companies such as Bunnings, who also rely on smaller operators in Australia and international suppliers have been affected. Now, me personally, I'm a bit of a handyman. I'm trying to build a deck at home, and I need to reroute some plumbing. So I had to go to Bunnings on the weekend and try and find some downpipe sections and those sorts of things, but I couldn't actually buy them because their supplier of those particular items hadn't actually come in yet. So you can see that even companies like that were affected. Another scenario is we basically had another staff member whose husband is actually a plumber. So they basically said to us that the company Reese, you may know of the company Reese, from the block, bathroom, tap, toilet supplier. They actually had a massive gap of taps. In fact, it was a 25,000 gap of taps within the business. So, for someone like that, a supplier like that, similar to Bunnings, what that actually does, it obviously means that they cannot on-sell those products. So on-selling to builders and plumbers and other tradies, and what that has, again, in terms of flow-on effect, it means that they obviously cannot complete their jobs as well. So, that disruption in supply chain sort of, that sort of scenario sort of talks to how important supply chain is and the issues that we're facing. So what we think now, is definitely going to be more of a bigger focus on building resilience, contingency plans, risk assessment in the supply chains. And also what we found is that due to the still current challenges we're facing with supply chain in Australia, we're actually seeing a number of customers seeking funds for bulk stock purchases to bolster up the inventory to actually limit or lower that risk of undersupply. So if you think about that from a broker perspective, that's a pretty good opportunity. Third section, staff shortages. So through this period, we basically had a 36% reduction in staff. Now, I'll just talk to a couple of little bits here. So what we found, the information that we got is that employment to the accommodation and food services sectors dropped by 29.1%, and the arts and recreation dropped by 26.3%. So these are the top two industries that were affected with the closures. In fact, 74% of businesses actually changed how they operated. And this, I can talk to a cafe around the corner from my house where they would hire between 10 and 15 staff members at any given time. And due to the restrictions, and having to only be able to offer takeaway services with a limited menu, we found that the business owners, or I saw that the business owners had to come back into the business on a day-to-day basis. We had the husband, part of the team, was behind the till. We had the wife, who obviously made fantastic coffees at some point, so she was back behind the coffee machine. That only hired one chef. Normally have two or three in the kitchen, just obviously due to the limited menu, and one other person helping with the distribution of the coffees. So we saw a lot of businesses sort of looking at concentrating on efficiency and reducing their fixed costs and those sorts of things. All right, let's see if we can get to the next one.
So again, these slides are being very slow today.
There we go.
There we go.
Okay, so if everyone can see that, so this obviously talks to the COVID-19 revenue trends across the country from what we've seen. So this information is actually taken from our credit decision engine. So obviously it's not from our book, of course, but it's a credit decision engine. So what that is, if you haven't heard of us talking about the CDE before, it's actually the software that we've developed that allows us to assess a business application within minutes. In fact, once we plug it into the system, the actual process takes about 15 seconds. So it's ridiculously fast, and we'll talk about it a bit. But what we've done here is we've gathered some data on multiple industries through the past month or so, and we wanted to share this with our partners. And you know what we found, you may know, is that it's not all equal out there. You know, different industries are experiencing, you know, different trends. You know, some are struggling, some are booming, but either way, all of these businesses are actually going to need capital for various reasons. So cafes and retail basically shut down. You know, some could continue and trade at a very limited capacity, with cafes only allowed to offer, you know, takeaway services, and most important, most limited, their offering will change entirely. Retailers were hit with closures, but those remained open were impacted by the limited foot traffic and due to restrictions, and some actually pivoted and started offering more in the online space. But that, obviously, with that comes money, time, and more processes. Liquor retailing. Now, this is a bit of an interesting one. It's not to say that you know, Australians are raving alcoholics. Well, I'll probably argue that with some people, but anyway. So what this does talk to, though, is it's basically showing that what we've had to do, because bars, restaurants, clubs are all sort of closed, it basically changed the way we operate in our own lifestyle. So, you know, a lot of Australians went to purchase from bottle shops and online bottle retails and those sorts of things, and essentially turned their living rooms into their bars. Fruits and veggie retailing, look, what we found is more and more people wanting to get into cooking and baking, and obviously being in a health pandemic, there's a lot of people wanting to be a bit more health conscious. So we saw that that segment really go crazy, which is great. And look, an example that really comes to mind, just to sort of show or sort of convey that, you know, it is not all equal. You think that essential industries would absolutely go crazy through this particular time, but one of the very first government guarantee scheme loans that I did myself was for a pharmacy with an attached medical centre out in Western Sydney. Now, you know, you think of a pharmacy, medical centre, health pandemic, people want to be buying medications, they want to see doctors and so on, but even this particular business was impacted. And this is because of the restrictions. You know, people obviously fearful of going outside their own homes, but also the government restrictions in terms of making it stay home. But they had a massive reduction in the amount of people entering the store. So they had a 28% reduction in their revenue. So what they required, they basically required $100,000 to actually help them with wages, rent, and a whole bunch of other things in terms of working capital. So it's just, again, sort of just to talk through that, through this particular period, not all businesses are equal, and everybody's impacted in different ways. All right. Oh, and one other thing I want to mention as well, there's actually been a pretty big shift away from trade terms where, you know, wholesalers are actually now wanting cash on delivery. So as a broker, have to think about that opportunity as well. All right, New South Wales revenue trends. So again, just we picked out 4 industries here. So what we know, Gyms were obviously hit very, very badly with their restrictions only just lifted. Some pivoted and turned to online training. Some actually provided the equipment to their members to obviously keep them health conscious, to keep them active, which is really good to see. And one scenario that sort of comes to mind, unfortunately, we couldn't help, but it was a great way of showing that, I guess the minds of business owners starting to think in different ways, where I had a gym owner who had a really good relationship with their equipment supplier. And they're looking at creating an online business where they actually sell equipment to the end user, which I thought was quite cool. Hairdressers and salons, quite impacted. They were limited to the 4 square metre rule. Also, we're seeing quite a good bounce back there. Unfortunately, people like myself haven't got much hair, so don't have much need for a hairdresser, but obviously other people do. So it's coming back well. Manufacturing, this is quite interesting too. So with the closures and businesses not being able to obtain the materials from their manufacturers, most of all from overseas, it's had to get them to start thinking a little bit more broadly and very much locally. So that's obviously driven the increase in the manufacturing. Now, it's had a bit of a hard time over the last few years, but what we can see there is that it's starting to normalise again, which is really good to see. And what I want to sort of talk to here is, even though there is a bit of a dip here at Prospa, look, these are the sort of businesses that we want to see. We want to see businesses bouncing back. Now, that's actually a really good news story. Okay, so and we'll talk to additional questions and those sorts of things that you guys should be asking. But those sorts of businesses, we're funding. Oh, and most importantly, these guys will need this. They need funding very, very quickly. So over to you, Prerna.
Perfect. Thank you so much, Ben. And so sorry, everyone, for our technical issues today. So it's really interesting to see how every industry has had such different impacts to their revenue due to COVID. As Ben mentioned, gyms have seen a decline in revenue due to closures during COVID. There are gyms that may have actually used this time to renovate or upgrade their equipment. I go to F45 and they were closed during the period, obviously, as they couldn't trade. And they used that time to renovate, paint their walls, and also get new equipment during the time of shutdown. So what I want to talk about in this slide is on the left-hand side, you will see some of the most common funding purposes that we saw pre-COVID. And on the right-hand side are some that we're seeing now. We've always funded for purposes such as cash flow, expansion opportunities, purchase and upgrade of equipment, as well as purchase of stock. But due to COVID, we are now starting to see some other uses of funds come up as well. We're now starting to see more and more businesses needing access to funding to diversify their business and to make the changes that are needed in order to adapt to the new environment that we're in. An example of this would be a retail shop investing in their website and marketing as they're shifting focus to offer more online shopping services. We're also starting to see more and more businesses requiring working capital due to delays in accounts receivable. On average, SMEs are waiting about 56 days for an invoice to be paid. COVID-19 might actually be pushing this out even further. This can have major impact on a business's cash flow. We also are starting to see more businesses looking to have a cash flow buffer or credit facility in place that they can draw down on in the event of shortages or cash flow gap. It's good to see that businesses are starting to realize that it's very important to have a backup plan in case something as uncertain as COVID comes up again. Next thing I want to talk about is the Government Guarantee Scheme product and what the Government Guarantee Scheme really is. I have been getting a lot of questions around this. So just to clarify, the Government Guarantee Scheme is a 50% loan guarantee provided by the government for the lender. We're not receiving funding from the government. Lenders need to actually fund the loans under the scheme themselves, and it is extremely important to understand this and ensure that our customers do as well. An example is if a customer takes out a $100,000 loan and they're unable to pay it back, we will be taking on a loss of $50,000, so we cover 50%. I'd like you to ask yourself a question. Have you had a customer who has had challenges getting funding through the banks under the scheme? or if not you, maybe another broker or a small business that you deal with or talk to quite frequently has been facing these challenges. It's very important to remember that banks are crucial in the current environment. They actually have the biggest reach to distribute funds into the economy. However, alternative lenders like Prospa can adapt faster to new economic circumstances and distribute funds quicker. If you have a client who is looking for bank rates, does not need funds urgently, and fits the bank's lending criteria, the banks are definitely where the client should be going. But the truth is that there are businesses out there that may not be the right fit for a traditional lender, or they might be needing funds quickly. That's when we're able to help those customers. One thing I have to say is that it is great to see that the government has recognised that lenders such as Prospa are able to offer three main things that are unique in the market. Firstly, we're agile and able to adapt to economic changes. If you think about it, we've pretty much created 2 new products with new policies within 2 weeks of getting access to the government guarantee scheme. It's incredibly fast. Secondly, we're able to offer speed. This is crucial in the current environment. SMEs have urgency to access funds, especially now more than ever. At Prospa, we can deliver an outcome within 24 hours. An example of this actually is that I had a scenario come through yesterday around 9:30, 10 a.m. Sounded really good, sounded like something we could help with. We spoke to that customer that morning, and we actually had an approval in place for this customer by 3 o'clock. Lastly, we also have the reach. We lend to SMEs that are finding it difficult to access bank finance or can't wait weeks on end getting a response, let alone receiving an outcome. It is great to see that the importance of alternative lenders is being recognised for the growth of the Australian economy. So we have 4 products in market now. We have our core products. They're business as usual. Nothing really has changed with them at all. Under the government guarantee scheme, we've introduced the back to business loan and the back to business line of credit. For the loan, we're offering up to $250,000 with 6 months of deferred repayments, and rates range from 9.6% to 19.3% annual simple interest rate. For the line of credit, we're offering up to $250,000 as well with 6 months deferred payments. It is a true revolving line of credit up to 24-month terms. Rates range from 14.95 up to 24.95 annual percentage rate. Commissions are earned on both of the back to business products, which I'll cover a little bit later in one of the other slides. An important thing that I want to point out is that there actually has been a lot of positives during this time. It hasn't all been doom and gloom. There are a lot of businesses in Australia that have actually done really well during this period. And I think we could see that trending upwards in the industry trends we saw earlier. I'll give you an example of one that I deal with on a day-to-day basis. So my local cafe in my residential block, I live in an area with lots of residential building, lots of people, very highly congested area. I go down to this cafe for a coffee every single morning without a fail. And when this whole COVID-19 situation started, I had a chat with the cafe owner one morning when I was getting a coffee to see how things are tracking for them. They actually told me they've actually been busier than ever because people are working from home. More and more people are coming down for their morning coffees and breakfast. They've got, people coming down for lunch as well, and they're doing takeaway home meal kits. So much more happening for them. Whereas normally, Monday to Friday, they'd have their morning rush for people that are going to their office. And that would be it. The rest of the day would be really quiet. So businesses like this cafe may not necessarily need the government guarantee scheme products or even want deferred payments. So we wanted to make sure we provide our partners and our customers with choice. That's the reason we kept our core products in the market as well. We also will be sending out our product guide to you after this webinar, but feel free to reach out to Ben or myself anytime if you do have any questions around the products or if you do have any scenarios. So what are we looking for? There's a few key differences, I would say, with the back to business product. Firstly, the business must be trading for 2 years under the back to business products, whereas with our core products, it's 1 year minimum trading. But most importantly, we're taking the time to understand each and every business and their circumstances during this time. We understand, we want to understand if these businesses have a recovery plan post-COVID-19. Things like, are they receiving JobKeeper? Are they on reduced rental repayments? Has their business diversified or changed? For example, have they moved online? Or they might be doing those take-home meal kits or start, Uber Eats and delivery methods like that. Every single small business is so unique and their situation is so unique. So it's so important for us to make sure we're asking the right questions to understand their needs. Wonderful. So next thing that I wanted to cover was what we need for our applications. For us, it was extremely important to stay true to who we are. We wanted to continue providing our SMEs with a simple, speedy solution and ease of funds. That is the reason we only require 12-month bank statements and ID for loans up to $150,000. Application is generally done on the phone with one of our highly experienced specialists. If we have a client looking for above $150,000, we generally require further documentation, but we're happy to liaise with the customer to gather this. We aim to keep the process as seamless as possible for both our partners and customers. Ben, I'll pass it on to you to discuss why we're the partner of choice for our brokers.
Fantastic. Thanks, Prerna. All right, guys. So thanks, Prerna. That's awesome. And as I said, look, it's really good to see that there's obviously really positive pockets and successful stories out of this, and that's what we obviously love to hear. All right, guys. So the next part, partner of choice. Why consider Prospa as your lender of choice in this particular segment? And I'd like to sort of break it down into, again, sort of three main pillars. Number one, trust. Trust is really important, right? As a broker, you are the trusted advisor to your clients. So, excellent customer service is really, really important. And, through excellent customer service that we provide here, we're not only protecting our brand, we're protecting your brand. Okay, it's a reciprocal relationship. So we understand that if we treat your customer badly or poorly, it's going to reflect on you, reflect on us, but also reflect on you as the referrer. And we obviously don't want that. So we have a lot of emphasis around across the board in our business to continuously strive and maintain exceptional Net Promoter and Trustpilot scores. As you can see on that page there, our NPS score it sort of bounces between 77 and 82 throughout the year. And you can obviously see the comparison between our Net Promoter score and the current bank average. Now, look, I'm not going to give an ear bashing to you regarding the banks. They have, as Prerna said, they're really important in this market. But what we found through fantastic feedback from our fantastic partners is that things like speed, documentation, those sorts of things can really impact customer experience. So that's why we put a lot of emphasis on these elements. Next part is the partner experience. Okay, so again, as Prerna alluded to, we want to try and keep the referral process very, very simple and easy for our partners. So it can be just a name and a number, and we do all the work for you. Obviously, you get paid the same. And even though that we've set it up this way, we absolutely work with the broker the way you want to work, within reason, because best practice that we've got in place, as always, if you have a scenario, for example, you call your BDM, walk through the scenario with you, give you an indication of if the deal is possible for one, but also set an expectation of where the deal might land. So you in turn can actually go back to your customers, set the right expectation with them before you send it through. So it's really important. And through our fantastic partner portal, if you guys have used that, I'm sure most of you have, you can actually track the status of your customer and where the application is actually up to. Of course, you can always reach out to us as your BDMs. Obviously, that's what we're here for. We're here to support you as much as we possibly can. So obviously, please reach out to us. The other part, which I believe we're pioneers in this space, is that we actually provide free marketing support, such as like white label EDMs, that you can send out to your database to extract the value out of that database. As well as we can create a dynamic landing page or a lead capture page that again is white label. It's all branded with your logo. And it doesn't obviously cost you anything, which is great. As well as an abundance of other free resources that you can actually use within your business to actually extract value from your database and bring in some leads. Oh, did I mention the BDM support you get from us is fantastic? Did I? Yeah, okay. Just making sure. Just making sure. Oh, and the last pillar, again, sort of just reverting back to customer experience. I want to sort of talk about the sort of the aftercare piece, the customer success team, which is an amazing piece of the business here. This is actually a dedicated team of account managers to basically look after your clients once they've been initially funded. So each one of your customers has the ongoing support of an individual account manager to aid with questions, concerns, or even additional funding. And this is mostly done without your intervention, but with the added bonus of you're still getting paid for the repeat deal, which Prerna will talk about in the coming slides. And look, please don't forget, you're also able to speak to these guys if you wanted to. And as your BDM, we can help facilitate that. So, transparency is key, and we're all here to help as much as we can. The great thing is that once we've initially funded a customer, and this is a really piece I love, that customer will remain under you. So, if you're talking about, and again, Prerna will talk about this on the next slide, but our repeat rate is around 68%, which basically means that 68% of all of our customers actually repeat at least once a year. If you talk about that ongoing topic of passive income, this is what I'm talking about here. So you could actually get paid multiple times per year for the one introduction, which is quite cool. So if you're going to I guess compare that to the average mortgage refi life cycle, it's about 3.3 years. And I'm going to talk to this scenario here. This is actually quite powerful. So have a listen to this. So one of our initial referring partners up in Newcastle sent through a customer who was a hairdressing customer, right? Who had a small salon up Newcastle Way, and he approached us wanting to get a $20,000 loan because he had an additional bit of space within his salon. So his thought was, what? I could actually create another income stream here. I'm going to get a chair and hire someone else to bring in more customers. He's also thinking about creating his own hair product range and that sort of thing. So long story short, we funded the customer $20,000. He got his chair, got his additional staff member in, and 6 years later, he's got multiple salon sites. He's got his own hair care range that he actually sells through these sites. He has his own training academy to actually train up and coming hair salons, hair professionals. And this is all from the one introduction, the one very first loan. And if you think about it from a passive income stream, that broker introduced him once, got paid up front, but this customer repeats, this particular customer about twice a year, right? And if you think, you guys do the math, you're the finance gurus here. So if you're thinking about 2 loans at least per year, and these loans are not small loans now, they're circa $100,000 to $200,000. You think about that passive income stream that you're earning, or you could be earning. All right. And one other cool thing as well is that because we've helped this customer grow so much, he can actually access Tier 1 funding through the banks, but he still comes back to us. Why? There's 3 key points: speed, service, and simplicity. So it's really simple. All right. So hopefully that resonates with you there. All right, and now I'll just pass on to Prerna to talk us through a fantastic commission program.
Thank you so much, Ben. Commissions. That's actually a really good point you make about the repeat commissions. As you can see on the bottom of the screen, like Ben mentioned, about 67% of our customers do repeat with us. So in terms of the commissions, our core product hasn't really changed much at all. So we're still paying the 4% on the new referral on the small business loan, and then we're paying 2% on any fresh capital, which is what Ben was relaying. When your client does come back to us for additional funding, you will get paid 2% on any fresh capital that they take out. And if they're doing that 2 times, 3 times a year, ongoing for the next however long, you will keep receiving that. On the line of credit, it's 3% for first-time customers and 2% upfront for repeat customers, which will be paid on first drawdown. With the back to business loans, we will be paying 2% commissions on the small business loan and 1.5% on the line of credit. Like we mentioned, we are paying commissions. The main thing I want to point out here is that it's been a really difficult time for everyone, and we wanted to make sure we continue to support our partners as best we can during this time. Wonderful. I'll let you cover this.
Oh, it's almost a wrap. Look at that. Okay. So, guys, in summary, look, these products will be a lifeline for many businesses. Funding will support, their up and coming or current cash flow requirements, such as your rent, your wages, your bills. And look, as the economy starts to recover, the use of loan, the use of funds will evolve. Businesses will need their funds to grow, diversify, restaff, drive employment. And whilst many small businesses are currently in survival mode, their resilience and adaptability has the potential for them to shift into thrive mode, fairly quickly. And we're already seeing, upward signs of this. We're getting busier by the day. We're seeing more and more inquiries coming through, and we're finding a lot of them. So, as I said before, if you guys aren't in this space at the moment and you haven't done a Prospa deal, now's the time to start reaching out to your SME customers. Also reaching out to your referral partners, like your accountants, your planners, your business brokers. Get out there and start having these conversations, or existing customers, obviously. Have these conversations. Start talking about how they've been impacted. What are their plans? The growth plans over the 6 to 12 months. And be a part of that. It's really important to sort of add value in different ways. And we're here to help at the end of the day. So guys, have those conversations, and look, let's start helping these Australian SMEs get back to business. All right.
Absolutely. So like Ben said, we're here to support you. You have a team of 4 BDMs that are always available to help you with anything that you need, as well as our applications team and our sales support team as well. I would like to say a big thank you on behalf of Ben and myself to you for attending this webinar today. We're happy to take any questions. So if you do have any questions, please feel free to use the Q&A function. But if you'd prefer to have a personal chat with myself or Ben or any of the rest of the team, feel free to reach out at any point. The details for all of us are on the screen.
Okay.
Thank you.
Okay, let's have a look and see if we've got any questions here.
Yes, we do.
Okay. Just bear with me, guys. We'll zip back up to the top.
Perfect.
Okay, so we've got a pretty good question here from Mark Blackshaw. Thanks, Mark. Thanks for your question, mate. So Mark's question is, considering your analysis is based on transactional history, how is Prospa assessing the past 3 to 6 months, as in most cases the numbers will vastly less than pre-COVID-19 numbers? Sorry, hopefully I'm reading that properly. Okay, look, guys, it's actually a really good question, because this is obviously part of that uncertain part, and businesses are obviously impacted differently. So what we're doing, obviously our technology, our people, we look at obviously a combination of pre-COVID and post-COVID, and a lot of emphasis is obviously looking at how businesses are bouncing back, but it's always on a case-by-case basis. What we try and talk to brokers about now is ask those right questions. So as Prerna alluded to before, ask are they in JobKeeper? What challenges have they seen? How they bounced back? How have they pivoted their business? What are they doing in that space to really sort of come out and grow at the other side of this? So those sorts of pieces of information are really, really crucial for that. Hopefully that answers that question for you, Mark. Feroz, there's one there in terms of what is the rate. So obviously Prerna's already covered all of this for you, my friend. But obviously we will provide you with all the information on the documents. Let's have a look here. What else have we got? Sorry, gosh, bear with me. Linda, I like this question. How do we organize the landing page with Prospa? Now, guys, this is really, really easy. Linda, it's super, super simple. So I'm not sure if you're accredited with us, so hopefully you are. But once you're accredited, literally it's just as easy as clicking on a link and filling an online form. And that it'll just general questions. You can upload your logo through that. Comes through. And a fantastic marketing team will jump on that for you and have that within a week. Roughly within a week, sometimes faster. Yeah. So hopefully it answers that for you. And also don't forget, Linda, as well, if you log into your partner portal, there's an abundance of marketing materials there as well. There's also another version of the landing page. It's what we call an iframe. So, for example, if you have your own landing page that you've developed, you can actually have this iframe, which is like an online application widget, if you want to call it, where you can embed that onto your own website as well. So it's very, very simple to do. And of course, any questions through the portal, you can always give us a call. Run through it.
Commissions. So
Greg Levitt.
You wanted to check if the commissions are only payable on the back to business products? No, so we are still paying commissions on our core products, so 4% upfront on the small business loans. On the line of credit, it's 3% for a new customer. And then we've got the back to business products where it's 2% on the small business loan and then 1.5% on the line of credit.
Fantastic. So if there's anything else there we can cover. I think that's basically it, guys. So,
actually, Peter did ask if you will be receiving a copy of this recording. Yes, you will be.
Yep.
We will be sending out a recording of this webinar, which will be live, I believe, about a week after today. And we'll also be sending through a product guide, the commission schedule for the back to business products, as well as the excluded industry list for you to review as well. On top of that, if you do have any scenarios, any other questions, feel free to reach out to Ben or myself. Always happy to help.
Fantastic, guys. All right, well, that sort of wraps things up. So again, thank you so much for attending. I hope you've managed to take on board some of the information, have thought about the opportunity, and started to thinking of ways that you can obviously help small businesses get back to business. And of course, as we always mention, please give us a call if you have any questions, customer scenarios. We always want to talk through any customer scenario, even if it's something we can't help with. We'd rather tell you that we can't do it rather than you guys miss out on an opportunity. And even then, if we can't do something, we'll try and point you in the right direction of where you could potentially go with it. So guys, thank you so much again. On behalf of Prerna, Prospa, and the Prospa team, have a wonderful day, and we'll talk to you soon.
Thank you. Have a great day.